Jinesh Gopani, Head of Equities with Axis AMC, joins us. Jinesh, IT has been a performing sector, but the commentary from Infosys does not indicate that the sector is really at beginning of a boom phase. So what happens if a performing sector now suddenly takes a backseat?
See, I think it's too much of a knee-jerk reaction for just lowering the margin guidance for Infi by 1%. I think more if you look at from a longer-term point of view, and if they are able to use those expenditures for future growth, then I think there shouldn't be an issue. Also, if you see last time when Accenture came out with report, there also the margin guidance had come down, and the stock had fallen, I think 6-7 odd percent. I think it is too much of a knee-jerk reaction. We'll have to see how the growth pans out. As I had said in the earlier also that incrementally IT is looking positive. However, talking about a robust growth doesn't seem to be coming by. And also we feel that again you will be seeing different approaches to the IT sector from the company's point of view, and how the companies are able to navigate these phases. So I think it is too much early to decide that margin guidance has been because of margin, the revenue growth pressures from the run-of-the-mill projects. We'll see over next 1 or 2 quarters how things go by.
So Jinesh, you are of the view that one should be buying IT and IT still has scope to outperform for rest of the year or maybe for another 2-3 years. Is that the messaging from you?
See, Nikunj, it all depends on how do you see domestic economy shaping up and how the domestic stocks will be doing. It's a classic hedge to the domestic story, and you know there has been concerns around oil prices, there has been concerns around currency depreciating, which normally doesn't augur well for the domestic sectors for some point of time, and hence IT as a sector is a natural hedge. As I said, incremental it is showing some positivity. Going overweight is not the call we are taking, but at least being neutral is okay.
You make of the entire news flow which is there for private banks, and when I say private banks, it could be a coincidence, but these are retail dominated banks. I'm not trying to get into Axis Bank or ICICI Bank. I understand your compulsion, but as an investor I'm sure you would be tempted to take a call. Does it make sense to buy corporate banks, or one should still stick to retail banks? Because frankly, those who've just bought retail banks, they may be expensive, but the outperformance which has come in HDFC Bank or a Kotak or IndusInd Bank in last 5 years has been far superior than what corporate banks like ICICI Bank and Axis Bank have given.
So we still like a retail-led private sector bank. As I had said that it is more granular businesses being run, has been able to navigate those bad patches pretty well. Then you are going for a capital raising in some of the retail-led private sector banks. So again the price to book comes down, and if they are able to again come back to those 20-21% ROE after the capital raise, so we don't have any problem to keep on holding those stories for a longer period of time. So we would still like to stick to retail-led private sector banks.
Okay. Jinesh, good morning. What did you make of Grah Finance's numbers? Does the premium that NBFCs are enjoying get justified because the growth momentum still seems very strong?
So I will not go into stock specific kind of details, but I think the numbers have been pretty good, and I think we'll have to see how the other housing finance company delivers. However, the channel checks what we do, or for last 3 months, we have seen that all will not be good for all the banks or all the housing finance companies. So it will be like men separated with the boys, and that is where the call we would like to take to stick to the good quality names, where we see 20-25% growth for another 5 years.
Okay, so that's the story with the financial sector. We were just a little while back talking about aside of IT, the other key set of numbers that we need to watch out for this time around is investment cycle-led themes, construction as well as real estate. And the early numbers that I saw from Sobha seemed quite decent. Do you think that in a meaningful manner, construction and real estate could be cleaning up? Is that an opportunity set? Sorry.
So it's a good short-term 1 or 2 year opportunity, especially from the construction sector point of view, because don't forget it's a cyclical sector. So giving very high valuation to this type of sector always is a challenge. So if you are into investment into 1 or 2 companies which would grow for another 2 years for 30-35%, then I think it is a good bet to take if it is available at a decent valuation. But the problem is it's not a scalable sector. You have 10 new companies coming every year to grab the market share. If you really go down and do research, the companies which were in existence in last 10 years have changed. Now the another 10 companies are taking the order book. So it's a very difficult sector to invest with a longer period of time. However, as a trade for 1 year or 2 year, it makes sense.
Jinesh, hi, morning. Some of the consumption trends as well have been very strong. We've all seen what ICICI, or rather, I beg your pardon, Titan as a stock has been doing. And more importantly, again, their 4Q guidance, talking about the jewelry sales as well as the watches segment. And it's all guns blazing. It's diamond jewelry as well, which is doing well as opposed to traditionally gold doing very well for them. For watches, they mentioned that it's the e-commerce platforms as well, which are really generating and garnering more revenue for them. What is it that largely you're expecting from consumption as a theme? Do you think it's going to be more selective in terms of earnings, or would it be more across the board where you'll have everything from liquor companies to pure play FMCG to some of the niche consumption stories like a Titan do well in the earnings?
See, I think at least the good part is in India, consumption is still holding on very well. And you are seeing signs of some improvement even in the rural side of the consumption sector. With the budget spending so much into the rural sector, I think consumption should hold on and slightly improve from here on. However, there will be pressures on raw materials, and hence the margins might be challenged for some of the companies. But broadly speaking, I think if you are expecting anywhere between 5 to 12% volume growth and some inflation in terms of pricing power, I think most of the consumption companies should do well.
Are you a buyer in oil marketing companies? There was this fear that oil marketing companies would be forced to digest all the upside which could come in from crude on the negative side. But frankly, the communication from HPCL, BPCL and IOC on various public forums, and when we spoke to the management of HPCL and BPCL, they clarified that look, they've not got any instructions from the government to take a 1 rupee marketing margin hit. So do you think the current decline in OMCs is more like a buying opportunity, a chance to buy?
No, I think Nikunj, again, it's a very difficult sector because you are dependent on oil prices. Last 2-3 years, you have seen oil at benign levels of $40, $45, $50. Now you are at $70. Very tough to say whether it will go first 80 or come down to 50 again. So it's again playing in dark. So we would like to avoid that sector from a longer term wealth creation point of view.